Hello and welcome to BQ Prime. Joining us today is Mr. Manish Tandon. He is the CEO of Zensar Technologies, having taken over less than a year ago. He's speaking to us a few weeks after the company's first quarter results, where revenue was up 1.3% quarter on quarter. The deal making was down a bit, but margins, surprisingly, were up 420 basis points. Mr. Tandon, welcome to BQ Prime.
Thank you. Thank you for having me, sir.
First question up, how have you managed such margin growth, especially given the environment that we are in right now, and then especially when the deal making is muted?
Yeah, I think, running any business is a team sport. And while I would like to take a lot of credit myself, but it's a team game. We were essentially our focus was on execution. And rather than, when a new CEO comes, the focus is much more on strategy. I felt that the first week needed to get our execution engine going. And then we can look at strategy. Essentially, there was nothing broadly wrong with this. So we went around fixing execution issues. And frankly, the results have been even better than my expectations also.
Okay, so great, the margin growth. Do you think you can sustain this for the rest of the fiscal as well?
So we have a target of maintaining margins in a narrow range in the mid-teens, actually. And we feel, at least I feel comfortable that we will be able to achieve the mid-teen margins throughout this year. And incidentally, none of whatever you have seen on margin, nothing has come out, or maybe 1% has come out from a one-off, but everything has come out of what I would call sustainable changes that we have made. So yes, I feel confident that we will be able to maintain margins in the mid-teen.
I raised the question of margins first because the deal making has not been up to the mark, if I may say so, not for just for Zensar, but also for the wider industry as well. So what is your outlook on that front, on the deal making front for the next 2 quarters? I'm saying this specifically because the spending is what we are hearing from other companies as well as experts and analysts, is that the discretionary spending has gone away for some time, but the essential spending is still coming up. Would you agree with that assessment, sir?
No, I agree that the market has been very tough. And the deal making, the life cycle of deals has been much longer. Discretionary spends have come down. Clients have become cost conscious. But again, my view is, what are you comparing this to against? If you're comparing it to the post-COVID boom, then yes, things are obviously tougher. But if you are comparing it to the pre-COVID days, which was the benefit normal at that time, I don't think that the market has changed very significantly from that time.
Okay. So are there any pain points that you're seeing right now? And do you think those pain points will be elevated in the near future? So I may expand a bit. Most of your revenue comes from the high-tech manufacturing and consumer verticals. Do you see the pain points in these verticals? If there are some pain points, will this go away in the near term? Or what are the long-term prospects that you see?
You see, Prasad, I can talk about the market as a whole, but again, we are a very, very small portion of that market. So, and that's why I said, let's forget about the market for a moment. And let's just focus on executing well, right? I mean, we don't even there will hardly be any client where we have a double-digit market share of their technology spend. And technology spend is increasing. It may not be increasing in the CIO organization, but it is expanding in the business organization. It may not be increasing at the same rate that it was during COVID, but it is definitely not declining over. So my focus has been to forget about the macro issues,
Hmm.
uh, focus on the essentials, which is take care of your clients, take care of your employees, and if you do that well, they'll take care of its shareholders.
Okay. We were going through some analyst calls that happened after the results, and there was a statement that enterprises are looking for low-cost vendors, which is a plus for you. Would you like to elaborate on that? So you think you'll be growing at the expense or beating larger peers in this particular fiscal? As per growth is concerned?
I would, you know, the connotation of that question, I would like to question a little bit.
Okay.
We are not a cheap vendor.
Okay.
Number one, I think if you look at our Q1 margins amongst the tier twos, we would be perhaps one of the highest
Mhm.
margin players in the industry. We are not going after bulk cost takeout deals because those have become commodities.
Mhm.
Tier ones go after them. It's a balance sheet play, frankly, in a lot of those cases. But this low cost stuff has given us price cover on the higher end deals. Deals which are being done not by tier ones, but
Mhm.
they're the consulting organizations, the engagement organizations, the experience organizations. And that has given us a price cover. And in fact, one of the most significant thing that is resonating with our clients is this entire continuum of experience to engineering to engagement, which was the domain of the large digital players and so on. And that is resonating really in low. And if the clients want to cut costs, those are the services that we are going after, not the bulk commodity plays that are out there.
Got it. Let's talk a little bit about how what Zensar is doing on the generative AI thing, the latest new buzzword in this space. So, what is Zensar doing in this space actually?
Oh, we are doing a lot of things. We have launched two new offerings. One is actually on the Azure Marketplace, which is Generative AI Buddy. Second offering that we have launched is around data. So, generative AI, the what powers generative AI is data. And the question that we are asking enterprises is your data ready to speak to generative AI, right? So, those are the offerings. We are looking at productivity improvements internally. We are looking at uh, some of the legal and IP issues that are there. But most important, we are working with our clients and doing proof of concept with them and for them using our capabilities that we have built in our Zen labs. And some of these have been very, very exciting overall. So a lot of action on the generative AI front. How much of it will translate into business on time with that?
Okay. My final question to you. You have been at Zensar for about 9 or 10 months now, if I'm not mistaken. How has been the journey so far, and what are your plans for this company going ahead?
Journey so far has been very exciting, exciting. Any other keywords that you can
Okay.
think of?
So,
So, yeah, and when you try something and it works, it gives you a tremendous amount of satisfaction. And as I said, it's a team sport. The team is charged up. The team is excited. The board and the promoters are taking us on. So it's been very good. Um, I am as to the future. I'm a very pragmatic person. I didn't want to promise the moon and fall on the earth with a thud. So we are saying that what I'm saying is that every year we want to move up a quartile as far as our peers and benchmarks are concerned. So currently we are at the bottom of the bottom quartile. Next year maybe we'll move to the third, second, and eventually to the top. So because things remember Zensar is a 100-year-old organization, things cannot change overnight. So very pragmatic view overall. And I'm very confident that if we get the support from our clients, the board, and the employees, we can make it happen.
Got it. Well, I'll just say all the best, sir, for whatever comes for Zensar and you. And again, best of luck for the rest of the year.
Thank you, Tushar. And very nice.
Thank you so much, Mr. Tandon. Thank you, viewers, for tuning in. This is Tushar for BQ Prime.